It's a public holiday here in Nigeria, but it's still a good day for Business Incorporated. Welcome to the show. I'm Ini John Mekwa. On the show today, AFDB to invest $3 billion in Africa's pharmaceutical industry. An artist doubles investment in Africa Energy to $2 billion. Zimbabwe foreign exchange auction allotment break $42 million mark. You're welcome. Well, we tee off the show with the market's intraday figures. In NGX in Nigeria closed positive yesterday at 0.18%, as the market is closed today for public holiday, while South Africa's JSE advanced 0.83% intraday. EGX 30 of Egypt was also positive at 0.77%, but Kenya ended Tuesday's session positive also. In the Middle East, major markets we track were mixed at intraday. The market in Abu Dhabi declined by 0.14%, while Dubai's index rose 0.36%. Elsewhere in the region, Saudi Arabia was up at almost 1%, while Qatari index declined 0.23%. And in Europe, European stocks gained slightly on Wednesday as global markets geared up for key data releases, including the latest reading of U.S. inflation. And Chelsea has details on the stock, especially after yesterday. Hello, Chelsea. Welcome to the show. Good afternoon. Well, European stocks seem to have stabilized after yesterday's inflation-driven plunge. Is the sell-off over?
Well, I would have said yes until about 2 minutes ago when U.S. inflation data came out. It seems to have really shocked the market. If you look behind me, you can see the DAX is really falling off a cliff here. It had been positive before. It's going quite negative now. The U.S. inflation data did appear to be much higher than a lot of investors had been expecting. In all, overall, prices rose about a little over 4% in April. Economists had not been predicting that. So I think previous to this data, we had seen a bit of stability in markets. Here in Europe, people were very much focusing on an upgrade to the EU's growth forecast for this year. There had been a lot of optimism about vaccine rollouts, about new stimulus efforts coming out of here in Europe. But I think inflation is definitely back at the forefront of trading here.
In Germany as it released its latest readings today on consumer prices for April. What did it show?
So German inflation also heading higher, not to such an extreme degree, but it is rising. In April, prices here in Germany rose by about 2%. That was the highest level since 2019, so 2 years. In particular, what we see driving prices here is energy prices, so things for like motor fuel, gasoline. Those prices have gone a lot higher this year, in part because the government has put in place a new carbon tax to bring down emissions as part of the climate package that they are coming forward with, that has raised prices for gasoline and other fuel here in Germany. As well, we're starting to see just broader price increases. So fresh vegetables, for example, were about 9% more expensive in April compared to the prior year. Things like chocolate, tobacco, really a wide range of goods. Consumer goods are getting more expensive, and businesses as well are flagging that because of these commodity price increases. We're seeing things like corn, iron ore, copper, all of their prices are getting more expensive too.
Well, still talking about Germany, the government has decided on more ambitious climate targets for the country. Amid criticism, it is moving too slow to cut emissions. What will this change for the economy?
Well, obviously, the move towards cutting emissions is a major economic upheaval for every economy in the world, especially here in Germany, where we still have a lot of industrial sectors. So there's still a lot of, steel producers. We still have a pretty large coal industry. So some of these sectors that require a lot of fossil fuels at this point, they are going to get hit really hard by this change. Today, the federal government said that they do plan to meet net zero zero emissions, so producing no emissions by 2045. That's about 5 years prior to when they had initially expected to hit net zero. That will require a lot of changes to German industry. We already see the auto sector really taking this on, increasing their share of electric vehicles. But if you look at something like the steel industry, they still mostly rely on coal to fire their mills. So they will have to, for example, adapt to hydrogen, and all of this is going to cost a lot of money. The government here has already said they plan to spend about 40 billion euros as part of a stimulus package passed last year to help with the climate transition, but it will likely take many more billions of euros to help these industries and help these workers really transition to a more climate-friendly policy.
Obviously a long-term plan, I see that. Thank you so much, Chelsea, and enjoy the rest of your day. Well, we move over now to London, where Juliana is waiting. Juliana, good afternoon, and thank you for always being there again this afternoon. Well, infection data suggests that there are 28 hotspots across England. What's the plan in handling these spots as the anticipation towards Monday builds up?
Good afternoon, Innie. Well, I think it's very important to point out that things are getting much better here in the UK. Yes, there are a couple of hotspots, 28, as you said, hotspots in England, where the infection rate is above the national average. But considering just how much Brits have been through over the past year or so, the media here, as well as the government, are really playing down this. If we look at lots of the infection data from across the country, hospital admissions are at their lowest since last summer. One of the reasons why we're opening up England more on Monday is that the hospital rates in the data have hit the government's 4 targets. So it's not just to open the economy. We had to make sure we are going through stringent tests, and we have passed that litmus test. But as you said, there are these hotspots that have appeared, particularly in the north of the country. Lots of speculation that this could perhaps be linked to that double mutant variant that we've seen as part of the surge in India. We do know that there are large Indian communities in some parts of England where these hotspots are being located. Important to note, however, there was a government minister, I believe he's the Environment Minister, George Eustace. He was speaking on TV this morning, and he didn't rule out local lockdowns, although we've sworn it into legislation that we will not reverse the lockdowns we've done thus far. I think there's a little bit of balance about what happens if there is a local spike like this. Hopefully it won't get to that. And like I said, really important to state that we have come a very, very long way in this country, and everyone's looking forward to getting out of this lockdown once and for all.
Yeah, I see that even from you, Juliana. Well, TUI is switching to bigger planes since its bookings rose 182%. This confidence should be coming on the basis of, this anticipation for Monday and some other easing of the lockdown in the country, right?
Well, yeah, absolutely. TUI, they're Europe's largest tour operator. They've posted their 6 months to the end of March trade report showing that they suffered losses of 1.5 billion euros. This has taken their revenue down about 89% to about 732 million euros. But despite those huge losses, bosses are still confident about summer. And this is even despite that this summer they've only experienced 2.3 million bookings. Sounds like a lot, but that's still a third down from what they experienced in the summer of 2019. Some of their biggest holiday makers are, of course, the Brits. The Brits do like to get away from the cold isles of the inner land here. And they are looking to Portugal. Portugal, one of their main destinations, that's been put on the green list when we get out of this travel ban on Monday. So you can go to Portugal from Monday and come back to the country and not isolate, which is obviously a win. Since that announcement was made last week, they've seen the bookings for Portugal shoot up. And of course, with the bookings shooting up, the price to go to Portugal has shooted up as well. So that's one of the reasons why bosses at TUI are pretty confident about the summer. They are, of course, urging the British government government, as well as other European destinations, to try and ease the travel restrictions, to give some priorities to people that are vaccinated and to people who obviously take or produce a negative test. So yes, even though they've suffered severe losses, looking at their bookings, TUI aren't going to do too badly this summer.
So how's the market doing this afternoon? The U.S. inflation having any impact? I mean, have you been able to get that before you came on?
No, I wasn't able to get it because I was standing here in the studio listening to you talking to Chelsea, but I did have a sneaky look on my phone. I didn't see that data, so I'm not sure where she got it from. But, of course, there was inflation fears, which is why the FTSE and the European market suffered from a very severe nosebleed yesterday. They have finally recovered. I think within the square mile, we're looking more at domestic stories. Of course, we had that GDP data from Q1 come in this morning showing that the economy contracted by 1.5%. Still a contraction, but massively different to what we were thinking about 3 months ago, where some economists had predicted that the economy could contract by about 4%. So this 1.5% is very much in line with the targets set by the Bank of England, the OECD, the Office for Budget Responsibility, and the Bank of England, that yes, indeed, Britain will recover pretty substantially this year. We're already seeing robust retail sales. A lot of people are shivering in the cold, having a dinner and a glass of wine outside. So, of course, once the economy opens on Monday, we are going to see a much more a robust rebound, and the economy is on target to recover pretty swiftly in Q2, Inni.
All right. Thank you so much, Juliana, and enjoy the rest of your day.
Thank you.
So we move now. Asia Pacific shares were mostly down today as Taiwan's market tumbled after authorities said they may raise its COVID-19 alert level after an outbreak in recent days. The Taiwan Stocks Exchange fell 4.11%. In Japan, the Nikkei 225 tumbled 1.61% to 28,147.51, while the Topix Index fell 1.47% to 1,877.95. Japanese automaker Nissan shares tumbled 10%. The company announced that its annual operating loss in the year ending March 31st widened to 150.65 billion yen from a 40 billion yen shortfall in the past year. Overall, auto shares in Japan fell on Wednesday morning, except Toyota Motor, which was up more than 2%. South Korea's Kospi Index fell 1.49% to close at 3,161.66. Mainland Chinese markets were mixed. The Shanghai Composite closed 0.61% higher at 3,462.75, and the Shenzhen Component rose 0.70% to close at 14,064.86. Hong Kong's Hang Seng Index rose 0.67% this afternoon, down under the Australian benchmark AX200, declined 0.73% as major banking names came under pressure. MSCI's broadest index of Asia-Pacific shares outside Japan lost about 0.73%. And in the U.S., stocks futures declined in early trading today after the Dow's worst day since February. Dow futures fell more than 50 points, while S&P 500 futures and NASDAQ 100 futures were also in the mildly negative territory. Yesterday, technology stocks fell, but eventually recovered, spurring selling in the broader market. The Dow Jones Industrial Average lost 473 points, which is 1.4%, dragged down by losses in Homeport, Chevron, and Goldman Sachs. The S&P 500 slipped 0.9%, but avoided its second straight 1% loss after Monday's drop. The Nasdaq Composite ended the day as a relative outperformer, closing down just 0.1% after dropping more than 2% at its low of the session. And oil prices rose today after a drop in U.S. crude inventories reinforced OPEC's robust demand outlook, while the market awaited fresh updates on the Colonial Pipeline outage. U.S. West Texas Intermediate crude futures rose 29 cents to $65.57 a barrel, adding a 36-cent rise. Brent crude futures climbed 31 cents, which is 0.47% to $68.86 a barrel. U.S. unleaded gasoline prices hit an average of $2.99 a gallon. the highest since November 2014. OPEC said it expects demand to rise by 5.95 million barrels per day this year, unchanged from its forecast last month. However, it cut its demand outlook for the second quarter by 300,000 barrels a day due to soaring COVID-19 infections in India. We'll take a short break now. When we come back, we'll head to the African continent. You're welcome back to Business Incorporated. We head now to Ghana, where for over a week now, many have been using social media to send their government a message using the hashtag #FixTheCountryNow. This campaign, led mostly by the youths, is made up of a long list of grievances. They complain about unemployment, poor roads, power cuts, water shortages, and rising living costs. Mr. Labi John Kennedy is a managing partner with Bespoke Company Business Consulting and will give us updates on this campaign and other issues. Hello, Mr. Labi. Thank you so much for joining us this afternoon. So what's the latest on this campaign, the Fix the Country Now campaign? What's the latest now?
Basically, the governments have been able to listen to us, even though it's not in a direct way, it's in an indirect way. And there was a meeting by the Minister of Finance on Sunday, trying to explain how things are going and what measures they are trying to put in place. As at yesterday, the trend was a bit down early in the morning, but towards the evening, something happened. The National Security Officers went to one of the renowned radio and TV station to pick up a journalist, and it went viral, and everybody became annoyed, and the hashtag came up again. And till this morning, the hashtag is still trending very hard.
Okay,
but so
but
far, so good. I think they're better.
Is the campaign just on social media, or has it been taken to streets and outside the virtual world?
Okay, so it's mainly on social media. The conveners plan to take it to the street on Sunday, but they were met with resistance because the police went to the court to seek an injunction, and the lawyers of the conveners are also finding legal means to make sure that the demonstration is being held. But it's a bit challenging due to the coronavirus. But basically, they are hoping that maybe this week it will come out. But right now, it's mainly on social media, in offices, in classrooms, and everywhere, but not on the streets.
So, is there a leadership to this campaign by the youth? And have there been meetings between the leadership from the youth side and the government? Or is it just the youth airing or pouring out their grievances?
So basically, there's no particular leadership, just like the what happened in Nigeria then.
And SARS.
And SARS, exactly. There's no leadership, but people were able to resonate with the challenge they are facing. And we were able to come together and say, no, we don't want this. We want the country to be fixed. So the lawyers came in, advisors came in, and they are all rallying around to make sure that they are able to put their grievances straight to the government. The government heard, and you see through different platforms trying to address issues, some saying things that will be favorable to the government, some saying things that will not be favorable to the government. But the discussion is still on, and people are actually saying their mind.
Yeah, there was also the issue of the $10 billion to fix the road, and some people have been reacting to that. How is that now?
Basically, I see this as a damage control approach, because we know before now that it will cost you so much to fix the road. Now, you can't just get $10 billion and from your coffers and say you want to go and fix the road. It's not possible. We know that if you want to get this done, you are supposed to do it gradually and face it out over a period of time. But I think the government is trying to just explain to us that, okay, they have this on hold. They want to make sure they are able to get funds to get these things done. But to be honest with you, I don't think they will get it. I don't think they have this in their coffers. I don't think they can go out there and borrow, because currently the debt to GDP ratio is 70%. And you can't borrow internally because the trust in government now is a bit low. So basically, we don't even know where they will get the money from. And we are hoping that whatever they want to do, maybe they will to get the money and start something as regards the road.
What about the money for the Ghana Cares program, 100 billion CDs?
Yes, the concept of the 100 billion cities program, it's very, very good. It's encouraging. It will actually fix every sector of the economy and make sure the economy runs smoothly and becomes strong. But right now, it's not about what you are trying to put in place. It's about how you get the funding to get it done. You understand? Now, taxes has been raised, levies has been increased, VAT increased. We have about 12 taxes and levies on petroleum products alone, trying to find ways and means to get this fund. But I see that as a lazy approach. I know the government is trying. They are trying to make sure things work, but they are not trying enough. The reason I'm saying this is that there's so much leak in the system as regards tax revenue. Find ways and means to block those leakages and get more people into the tax net. You get enough money. You don't have to increase tax every time, increase for price every time. And this is affecting the common citizen. Imagine filling a tank and you're spending up to $60 just to fill a tank to use in a week. This affects product, it will affect productivity, it will affect price, commodity, it will affect everything. And this is what the people are saying, that they don't want it. Find ways and means to fix it. Due to the outcry, they're able to reduce the fuel price by 10 pesos. When I say 10 pesos, it's so minute, and people say no, it's still not enough. Find ways and means to reduce it. Because as at December, when they voted for the current sitting president again, the price of fuel was 4 cedis, 450 pesos. But now it's above 6 cedis. That's above $1.70. Imagine, people cannot survive on this. So the outcry is there, and we are getting positive response from the government. We hope this will continue and things will be done and done appropriately.
Yeah, we certainly hope that the response will be implemented and then it will be impactful, you know, on the life of the citizens, especially the youths who are leading this campaign. Thank you so much, Mr. Alabi John Kennedy, the managing partner of Bespoke Business Consulting, for joining us and sharing your thoughts with us this afternoon on the program. Well, moving on now, the African Development Bank has said that it would invest $3 billion to build Africa's pharmaceutical industry in the next 10 years. According to the president of the AFDB, Dr. Akinwumi Adesina, the bank is supporting the Africa Center for Disease Control with $28 million to strengthen its capacity to tackle the issue of vaccines. He added that the bank is currently working with partners on how to best support the financing of the manufacturing of vaccines on the continent. He emphasized that the bank was supportive of public development banks, which could be seen in the establishment of the ADFI and several national and regional banks on the continent. He notes that the public development banks must deepen their ability to reach all parts of Africa. And that is LLP, a London-based private equity firm focused on emerging markets, plans to finalize deals on 6 African power projects in 2021 as it looks to double its energy-related investment on the continent within the next 5 years. The firm is planning to double investment to $2 billion in countries including Nigeria, South Africa, Kenya, Egypt, Ivory Coast, and Ghana, with a focus on wind, solar, and gas energy resources. Actis is bolstering its focus on the world's most power-starved continent, which has had electricity access rate of just over 40%. The private equity firm, which was spun out of CDC Group, the UK government's development finance institution, manages about $10 billion globally. And Reserve Bank of Zimbabwe foreign exchange auction allotment this week reached a $42 million auction, becoming the highest amount to be disbursed on the platform amid sustained exchange rate stability on the platform. A trading update released at the close of business Tuesday shows that the main auction received $36.5 million, with priority going towards support boosting productivity. And that's how much you can take on the program today. Thank you so much for watching. I'm Ini John Mekwa.